The LSPs know when we're in a tough environment, the amount of quotes they do per day have to go up. So the expectation right now is 10 to 12 households quoted per day to get to that level. When things were a little different, we were writing. I mean, we had a month where we wrote 1,100 items. It was hard going from 1,100 down to 700 just based on all state changes. Yeah. We had to buy more leads, quote more to sell less.
That's kind of the advice for new agents. It's get access to capital. You're gonna need it, and you gotta pay to play. I think for me, a big game changer was welcome to another episode of the A1 Experience. I've got a local Nevada legend in my office, somebody that I have known and competed with for the last couple years for the crown of Nevada, and he has it right now. I can't even, he has it. And so, Tye, welcome to the show.
Thanks, Nick. Appreciate it. I'd say we battle, right? It's a battle, but we go back and forth.
Yeah, man. No, it's been a pleasure getting to know you the last couple years. If you guys don't know Mr. Tye Bearden, Tye is a husband and father of two with a third on the way, having his third shortly after I have my first. Tye has built a $22 million agency. Is it from scratch?
A lot of scratch, but a lot of purchases too.
Okay, but when you originally started, it was scratch.
Yeah.
Okay. $22 million agency over the last little over 10 years. He started his agency in 2013. He is crushing it. 650 to 700 items, $500,000 in premium every single month. 23 total staff. So that's no easy task right there. But sheesh, that's a lot. So Tye, for those that don't know you, tell us a little bit about your story.
Yeah. Came from the sales world, commission sales experience. I think a lot of us have been there. Had a buddy in Allstate Insurance, really liked the aspect of residuals, and he got me into it. Bought a small book, so I said scratch, but we bought $700,000 in premium, which seemed like a lot, right? But way back then. But yeah, pretty much scratch on enhanced compensation. And we started small, right? One staff. It was just me and, working 10, 12 hours a day trying to get it up and running. And since then, we've acquired almost every 2 years, we've purchased smaller books, 2 to 3 million. The last one being just in 2022, which was another ECP contract. So been on enhanced comp the entire way. So been an agent 10 years. I was on ADB, and I think this is our third ECP that we've been on.
Is Oregon ECP?
No, Oregon's not. Yeah, okay. That's established. So
yeah,
just Nevada books.
Yeah. For those of you guys who don't know, I mean, those are Allstate agents will understand, what that means, but essentially it's just a captive kind of contract for the first couple of years. What did you do before insurance?
There's this, you guys have them here. It's called RC Willie. It's just a retail store, furniture, appliances. I was commission sales and electronics for a while. Got promoted to one of the managers of the furniture side. Did that for a couple of years, and then insurance all the way from then.
And so you started insurance. You were how old?
I was, let's see. I was 25, I think.
25.
Started.
Okay. So, I mean, it's been a heck of a run. One of the things I admire about you is you see it all the time, kind of over the last 11 years that you've been, or 10, 11 years. And you see some people, like Will described it as like a flash in the pan, where it's like, who is this guy putting up crazy numbers? And then you just wait like 6-8 months and it's just like, they're gone. It's like, what happened to that guy? They were crushing it. The thing I respect about you is I've always seen your name, but it wasn't until like the last 4 or 5 years. Like you've always been there, but over the last 5 years, you've just gotten better and better and better. And now you're just a force in Nevada, in our state, and honestly on the West Coast or the West, where you've continued to just that consistent growth. And so I think that's respectable versus that, I'm on the scene and then I'm kind of, what happened to that guy? And, so I
think that makes sense. I mean, when you see these enhanced contracts, they are short-lived. So if you don't have a game plan to get out of that enhanced contract and continue growth without all that added revenue, that's where you see those names drop off, right? Yeah. So I've seen that a lot too, especially here because we've had a lot of those scratch contracts.
Right.
Somebody will destroy it for 2 years. That money runs out, and unfortunately they didn't prep well enough to continue that run.
Right.
Yeah. So we've developed scalable processes. And just like you said, like 4 or 5 years ago is when we really started. Right before COVID, we really figured out a scalable model.
Gotcha. So what was that scalable model? What, I guess, was it an aha moment for you where things started to click? Like what was it?
Yeah. So it's kind of, we kind of backed our way into it. So Allstate, I think most people know, they used to give a bunch of money to marketing, right? 4 years ago, I don't remember if it was the CLDP program. It was internet leads through Blueprint, where they allowed us to get, if you're performing at a certain level, they'd give you free leads. Well, we were able to tweak that, and a lot of people didn't know this at the time, but you were able to tweak that campaign. We opened it up to statewide, and we just got flooded with free internet leads. Like I think we were only supposed to get like 10 or 20 a day. We got like 100 a day.
Wow.
I'm like, whoa. And we're like, okay, well, let's see what happens. And my salespeople started selling internet leads, and people were like, internet leads don't work. And we kind of thought that as well, but these were free leads. We were going to give it a shot, see how we did with them. And once we learned that if you buy enough of them, they work great, that was the start of our scalable model. Now it's pretty common knowledge that internet leads work.
Yeah,
I think
for sure.
that they had a bad rap, and they still do, but most agents know there's agents out there doing extremely well with internet leads.
Right.
So that's a well-known fact at this point. But we figured it out 4 years ago, and then we've just been working to improve it, perfect it, run the numbers. I'm a data guy.
Yeah.
So starting to put the numbers behind it, and now we have a scalable model, right? I can say, hey, this guy's going to get 50 leads in the next 2 days. He's going to quote X amount, and he's going to close X amount. And then I can repeat that over and over and over again.
Yeah. Yeah. Internet leads for me was described from my original mentor in this space, which was Will.
Mm-hmm.
And he's like, they all suck, but you just got to find the one that sucks the least. And I knew kind of going in, my problem was that I was very conservative with internet leads. Even like after like I realized that it works, I've always been like a personal brand guy, local presence, use my social media, but it's always been internet leads. You know what I mean? Like that's always been kind of the majority. And even when I got on an ECP contract, I did it so conservatively where I was writing only 50K. And I'm like, in retrospect, it's like, why were you so afraid to just buy more leads and hire more people? It was, so it's just.
When you're spending a lot of money, right? It's not cheap. I mean, internet leads, each lead could be inexpensive, but to buy enough where it makes sense and you can scale it is expensive. And I think we were all there. No one 4 years ago, it was 5 years ago, it was hard to find an agent that was buying a ton of internet leads.
Yeah.
Right. I mean, it's more common now. And now people could have more faith that, hey, if these 10 guys are doing it, then it can be done and it works and you can be successful at it.
Right.
We didn't have that 5 years ago. So it was like, okay, we're kind of shooting in the dark. We know they can work. All the vendors tell us they work, right? Of course, they're going to tell us it works. And then we tried 10 and we're like, whoa, those 10 sucked.
Yeah.
Well, you didn't try the 5,000 needed for a month to really give it a shot to see if it plays out the way you think it's going to play out.
Yeah.
And it's scalable. So you've done a great job on social media. I have not even gone down that path.
Yeah.
So to find a scalable model is key, whether it's internet leads or something else. If you have a good center of influence, mailers, as long as you can replicate it and get the same results over and over again, it's going to work, and it's going to cash flow, whether it's short term or long term, right? It's going to hopefully hit both short term and long term. But most marketing strategies, if done efficiently, are at least going to get you cash flow in the next 14 months, a return. Yeah. And that's with internet leads. That's what it is for us. I know growth is expensive. Also, it's on variable comp. That helps for sure. It helps reduce that upfront cost, but it's still, there's a decent cost to entry just because you need to do it the right way. And you have to have the processes in place. You have to have the technology in place, and you have to buy the appropriate amount of leads to make it work.
Yeah. How many would you say, how much marketing are you spending per LSP? This is something I'm wrapping my head around.
Yep.
When somebody's posting that they sold 1,200 items online and you're just like, okay, before I start feeling like sorry for myself or like I'm a failure, let me just ask them like, all right, how much are you, how many employees do you have? How much are you spending on marketing? It makes it a little bit more easier and more human to digest. And so
Yeah,
You
it's a good
have
question, and we have those numbers. We spend anywhere from 3,500 to 5,000 per person.
per person.
Yep, and that includes not only our leads, but we also have telemarketers. So that includes the telemarketer spend as well.
The cost for the
Yep.
telemarketers. Got it.
Um,
Do you have like Shark Tank style, or is
yep.
like
So
okay,
uncontacted leads, free game for everybody, and we have call cadence. So we know how many times we're going to try to contact that lead within the first minute we get the lead, first 2 hours, the first 2 days, and
yeah,
the cadence goes all the way out to 90 days.
got it. I have a question for you. I'd love to hear your call cadence because I've adopted one. I've never tried another one, but I'm kind of open to hearing, or I've heard Filar's call cadence, which is a little bit different. His is a little bit more reasonable. The call cadence that I've adopted, it's kind of like a little overboard, I would
Aggressive?
say, a little aggressive.
Okay.
But I've kind of met it in the middle between Filar's and this like over the top one. What's your call cadence?
This is also tough because there's not a lot of great technology out there where you can test the cadence, right? For me, it's okay, I can set up 4 calls for day one, right? But how do I adjust that to know if I go down to 2 calls on day one, how am I going to track my contact ratio for that first day? I can do it, but I have to spend a lot of time doing it because there's not a great piece of technology that will track that.
Yeah.
So it's kind of trial and error. But we are like day one, I know we're 3 to 4 calls, and then it drops down significantly. Like day two,
Call from different phone numbers to make it.
yeah, we use local presence numbers. So we identify their local area code and match a number to that.
Yeah.
We clean all of our numbers. So we're not spam or scam likely. We track that, we monitor that. Pretty common practices when somebody's marketing a lot. So yeah, day one is like 3 to 4 calls max. And then day two, I think it's another 2 to 3 calls. And then it just starts tapering down from there.
Yeah.
But what we know our contact ratio for day one's about 20%. So all the leads we buy on that day, we're contacting about 20% of them. So that's the number we'll kind of look at, and we're pretty happy with that.
Yeah.
Overall contact rate for all of our leads is about 50%.
Okay.
So if we buy 100, usually within the first week, we're going to contact 50 of them.
Got it.
And then it just, then we look at quote ratios. How many of those 50 are we quoting at that point? And then obviously close ratio. Out of the ones we quote, how many do we close?
I know I went to your workshop and, you'll probably shake your head at for me saying this, but I still don't know my contact ratio for my leads. I know like everything else, but the contact ratio is something I'm still not paying a lot of attention to, which I probably should.
Well, and it's again, technology piece.
Yeah.
Allstate does not provide a lot of great tools for us to track some of these numbers.
Mm-hmm.
So unless you're using some third-party technology, those numbers are going to be hard to obtain.
Yeah.
And you do a lot of social media, right? So not as many internet leads as I do.
Yeah.
And that's our bread and butter. So that's just one of the levers we have to keep an eye on to make sure we're running efficiently.
Yeah.
Especially with our close rates. I mean,
yeah,
Nevada, we're running at 6%.
It's getting bad right now.
Nevada's,
and it's hurting. On my personal referral and social media strategy is getting hammered right now with what's happening in Nevada. And I don't have a local presence in Oregon. Or Washington or Arizona, so it's certainly we're feeling that a bit, and so it's almost like we're leaning a little bit more on internet leads, unfortunately. But
that makes sense, because the people that are doing well and continue to do well can adapt quickly when Allstate makes a change. So for example, Allstate in Nevada came out and said, clean in 3, no tickets, no accidents, 3 years. 50% down or 66% down.
It's mainly 66%.
Yeah. So it is tough. And that's why we close at 6%.
Mm-hmm.
So what we do is we look at the other states we have, right? Oregon, Washington, you have Arizona, I have California, and we have to track to see what each state's performance is, because and this is where when you're talking to other agents and they're writing, 1,200 items a month, those are the questions I ask. Okay, well, let's take a look at what are your close ratios. What does that look like? Are we in line? Because I like to know, are we underperforming other agents or are we in line, but maybe our close ratio is half?
Yeah.
So we look at other states, and if I see a state like Oregon is at 9%, still not great. Honestly, but Nevada's at 6, right? So that's 50% higher than Nevada. So 6 to 9 is only 3 points, but that's a 50% increase.
Yeah.
Does it make more sense to go into that state and spend marketing dollars? Typically it does.
Yeah.
until Nevada, eases up on some of the restrictions and that we see that close ratio improve, we can pivot. And we've gotten really good at pivoting in the last couple of years because we've had to.
Right.
It's almost like, they say wildfires are good for forests, right? Well, these type of tight RMPs that reduce close ratio is kind of like hitting the reset button on the agency. Now we have to go back to the table and say, one, let's be super efficient because we can't afford to have any waste at 6% close ratios. And two, we'll clean up our vendors, we'll clean up our marketing. It's actually, in the long run, it's a great thing. We got rid of some low performing salespeople, and we're running super efficient.
Mm-hmm.
So we're ready when things get a little easier. Yeah, I mean, it's just such a well-oiled machine right now, and it's going to be so easy to, I don't want to say double our production because that's never easy, but once we see those close ratios get back up to just a national average, now give us 10% or 11%. I talking to agents this week, they're at 20%. Like, that would be game over. We're not there. I don't think we'll ever be there for our states, but give us 10, 11%, and we're going to do a lot more.
Yeah, man, that's some good context. I've heard this quote recently, like, when in doubt, just zoom out. And so I like that perspective. What is your expectation for your team? Like, do you have a minimum where it's like back-to-back months under this write up, verbal, you're out of here?
Yeah, we're pretty fluid, probably to a fault there. We don't have a set standard, but we do set standards every single day. We set expectations, we set goals. The main thing we like to see if you're underperforming is progression, quick progression, right? So if you're new and you're just starting out, as long as we're seeing progression, my top sales guy started at 9 items first month, 18 items second month. Now he's doing over 100 items every single month.
Yeah.
So I've had that. So I know I got to give you some time.
What
but
was
I
like his third and fourth and fifth month?
Just progression. Yeah, it was maybe up to from 20 to 35, to 45, and it was just a linear progression all the way down. So. And maybe that's bad because now I keep people a little longer as long as I'm seeing that progression.
Yeah, that's a good point.
Now, if you're a veteran on the team and you're not performing, especially with what we're doing with marketing and leads, I mean, my telemarketers are transferring. We got like 13 or 15 right now, and they transfer 8 to 10 a day each. So each it's almost a 1-to-1. Actually, I think it is a 1-to-1 at this point because we just got rid of some other. So it's a 1-to-1 telemarketer per LSP right now, and the telemarketers are transferring 8 to 10. So you can get 8 to 10 quoted households just from live transfers from the TMs every day. And if you can't succeed in that environment after our coaching, our sales coaching, and we've given you a pretty good shot, then it's probably not going to work out. Not with our strategy.
Yeah, for sure. How is your involvement? Like, what is a day in the life of Tye Bearden right now?
So I talk to my managers daily. I'm always open to the staff. They could always call me. They know that. They go through the managers. They're more comfortable with them at this point. But if they need me, I'm available. I look at the numbers daily. I'm looking at my vendor performance. I'm looking at my contact ratios, my quote, my close ratios. I actually enjoy it. I track how many leads we're buying every day per state. I break it out per state, per vendor, per campaign. And I have a spreadsheet. I just kind of input all the numbers, but I like seeing it. I oversee the sales team's performance. So I look at the numbers daily, and then I'll report to my managers on how I think they're doing, how we're doing for the month. What can we improve on? We do have weekly meetings. I jump in them once or twice a week, and see how everybody's doing. Yeah.
Yeah.
But other than that, I'm just, I work mainly on the sales marketing side of it.
Yeah. How important has agency acquisitions been for your growth and just building out what you've built now?
Yeah, acquisitions, and this might be a strategy that I'm going to change now that we are where we are. In the past, it's been enhanced comp opportunities and access to new states. So most recently, access to new states. You and I both did Oregon.
You realize when you get punched in the face, it's like, oh my goodness.
You need an outlet for sure. But in the past, with all the enhanced comp contracts, and I think Filar did this too, did it well, better than I did. But getting on those enhanced contracts and just taking your current model and duplicating it or moving it to that enhanced contract. So acquisitions always in the past have been small books to get a hold of those enhanced contracts. get the added revenue, throw that revenue back into the marketing machine to grow organically.
Yeah. This is a random question, and I'm going to start asking every agent this just because I'd love to hear this. But this will be the first time I ask
Oh,
this,
great.
which is, have you ever thought about going indie? Like, does that ever cross your mind?
Yeah, I think for every big
I
agent,
think everyone would be lying if they're like, every once in
absolutely.
a while, it's like,
Well, we're business owners, right? So we have to make decisions, to make sure we're the most profitable business owner we can be. And that indie has crossed my mind many times because you want to look at the model Allstate has, and you want to look at the model Indies have. And here's what I've found: Indies can do great, right? They have more access, but with our scalable processes and models, we're in a really good spot with Allstate.
absolutely.
We're in a
Yeah.
really good spot.
Mhm.
Like there's a niche for Allstate to make good money that even indies, in my opinion, can't always compete with.
Absolutely.
Because indies have their own issues. Yeah, they have a lot of carriers they can quote with. Their close ratios are higher,
Yeah.
but there's also a back end that most agents don't realize. And
The
that's
retention, because you have a solid retention. What is it?
87-ish.
But
Yeah,
still, I mean, that's considerably good. And how much better is it when you're indie?
it's good. It's a little better, but at what cost?
Exactly.
You know what they're doing for the high retention is they're reshopping, right?
Mhm.
So there's a lot of upfront training that you need to know with indies because you're quoting a lot of different carriers. You need to be an expert with all those carriers, which is also difficult. That's difficult to do and scale a large sales team to have that same knowledge with all those different carriers. But obviously, indies are super successful too. They have the residual game down. But for new business comp, it's hard to beat what Allstate's offering.
Yeah.
And the ability for us to cash flow such a scalable, high performing new business model.
Yeah. If you're captive, I mean, I think it's undoubtedly the best opportunity to have an Allstate office versus
Oh yeah.
and we could be biased, right?
With people, we kind of live in our own bubbles in the captive world. And I don't think people realize they may now just because of all the social media posts that indies had a really hard time, especially on the new business side of things when the insurance industry took a hit the last couple of years, right? I mean, indies lost some appointments. They had to jump through a lot more hoops. Allstate made some changes, some difficult changes for us. We were just complaining about them 5 minutes ago, right? But in relation to what happened to some of these other indies, especially the smaller indies,
Yeah.
we got off the hook pretty easily.
Mhm.
And we've been able to find ways to continue to grow, right? We didn't have to reduce our sales team. Allstate offered us different states we're able to go to. We're able to shift marketing to those different states to continue our success. We weren't trapped like some of these indies got trapped. So yes, I've thought about it. I've looked at both models. I'm extremely happy with where we are, and I don't know if I can cash flow in the short term much better.
The short term is the
Anywhere
key.
else. Yeah.
Yeah.
Because they got the long term. They got the
that's
renewals.
that's a long-term
We don't have the
strategy.
renewal.
Yeah.
So, 10 years down the line, when you look back and you're writing whatever it is, $5 million a year in premium, and then they're renewing at 7%, that's where the indie could outperform and will outperform. I mean, it's
Right.
obvious. Still,
Yeah.
their residual or outperform. So if you're looking to grow, hit it hard for the next 5 or 10 years, then stop. That model does look
That
pretty
worked really
attractive.
well. Yeah,
Yep.
absolutely. I think the one component for me that always has me looking at that grass on the other side of the fence is the commercial. I just interviewed my girl Cassidy yesterday, former State Farm agent, gone indie, and she has a team of 4 salespeople, or I think it's a team of 4 total. Maybe 2 or 3 of them are salespeople. 80% of her book is commercial. And she writes, on average, $500K a month.
Wow.
She closed a $1 million policy earlier this year, and now those are big hits when they leave, of course.
Right? Yeah.
But
Good with the bad. And that's a good strategy, and it's not a strategy being captive with Allstate. Our commercial access is not great, right?
yeah,
And it doesn't really make a lot of sense to even test that strategy.
yeah,
So I can't speak too much to it, but I know the indies that are doing the high premium commercial stuff are killing it.
yeah.
you know?
One thing I think about often is, or recently, is when she runs this team so lean and mean, and I'm like, I wonder if that's just an indie thing, because the thought of me being able to run lean, I don't think it's possible given like our customer demand and how many producers it takes and management team. Like I'm running almost a similar size to you,
Hmm.
just less salespeople. And I don't know, hearing her chat about this yesterday, I'm like, I don't know how I'd go that lean and
Well, they
still
don't have a lot of policies on the book, right? You said they wrote $1 million
just
policy. You might have 10 clients, and
80%. Yeah.
yeah.
Hmm.
So we have a lot of policies in force because
More,
we're personal lines, right?
right.
Commercial lines, there's not nearly as many policies in force because their premium is so much higher.
Yeah.
So one service person can service a much larger premium book because it's a lot less policies.
Yeah.
Yeah. So they're definitely another attractive piece to
Yeah.
use. If
And I
you
think,
can get into that market, figure out how to scale it, right? Because I'm all about scalability. Can you scale that process? And yeah.
yeah, I think Dana's done a good job of going lean and mean,
Mhm.
right? He's Dana's another agent in Reno, and I mean he's doing a great job, and he's diversifying a bit. So
Yeah, there's a couple different strategies I always hear when talking to agents. There's agents that like to run well and cash flow extremely well in the short term. And then there's agents that are more willing to reinvest almost everything to get as big as they can as quickly as they can to get more cash flow later.
yeah,
And
hmm,
both are good strategies. The safer bet is cash flow now because you don't know what Allstate's going to do.
yeah,
Um, I'm, I'm fairly confident in the next 5 to 10 years that Allstate's going to continue to make changes, but also continue to allow us to make money. Right?
yeah,
Every change
yeah,
they've
absolutely,
made since I've been an agent, they've reduced commission here, added commission here. I've always made more money.
yeah,
And I think there will be a tipping point where Allstate looks back and there's just big agents that are left. You're not going to see these $2 million agencies, I
yeah.
don't think, for much longer. They're going to grow, acquire, or they're just not going to be around, right? That's the model Allstate's pushing.
It's
So we'll
getting
see.
it's getting difficult with I can't imagine how these smaller agencies are able to afford talent. That's why I think like it's easier for bigger agencies to hire because one, we could throw more money at, job ads and headhunters and stuff
Yeah.
like that. But just it's there. I don't know about you, but it's an element of like a numbers game
Hmm.
with hiring in a sense. And I hate it. But of course I think I look for more local talent, which is tougher. But have you experienced a bit of
Yeah.
that?
When we were smaller, that was the hardest piece. I mean, I remember looking at a monthly cost of like Adobe or something, and we would do I don't even remember what it was like. We'd get 2 computers or 3 computers for $20 a month, or we can pay per user like $10 a month. Like looking at that and going with the cheaper option to be as efficient as possible when we were 3 or 4 million, because we didn't have access to a lot of capital. So that's a
Hmm.
huge hurdle, and it's hard to start scaling, hiring salespeople, buying leads when you're trying to rely on your cash flow to do it.
Yeah.
So my advice to some of the smaller agents have been, you got to find some capital. Whether it's a line of credit,
Hmm.
bringing money into the business to establish a model that's going to get those big numbers.
Yeah.
If you're shooting for your variable comp number every month and either you're barely getting there, you're barely missing it, or you're barely exceeding it, that's not the right strategy. And a lot of agents I found they're trying to rely on their current cash flow, which is hard to do when you're only 3 or 4 million, to really double or triple that number, that variable comp number.
Yeah.
So find access to capital, trust the system, talk to somebody like me, like you, Filar. There's so many people that are
Yeah.
willing to just jump on the phone
Yeah.
and just tell you, what not to do. Save this 500,000 by not making my mistakes that I've made over the last 5 years.
Yeah.
And we're willing to do that for free, right? So get on the phone, get access to capital. We'll tell you exactly how to do it, how to be successful.
And apply for the credit while you don't need it.
Absolutely.
The
Yeah.
moment you need it, you're
Yeah.
not going to be able to get it.
Right.
That's how these banks
Mhm.
work. So
Yep. If you have some equity in a book, you can usually get a line of credit, which is even with rates like, well, I don't
yeah,
want to pay 10%
sure.
interest rates. Well, if you can't cash flow better than or get a return better than 10%, then you're not doing it right. So
Yeah.
even at high interest rates, you can still make money.
Yeah.
And I mean, you're right. Once you get bigger, people always think, "Oh man, that must be so hard when you have 23 employees and managing it." It's easier, right? It's a lot easier. If I lose a salesperson, I'm not stressing out at night because
Yeah.
now the variable comp I exceed by 3 items a month. I'm going to miss it by 10 items a month, right?
Yeah.
I don't stress on that. When you lose employees, you have more revenue to play with. You could be a little bit more inefficient when you're larger, and yeah, it actually gets easier.
Yeah. I think some good advice for new agents is, especially with the hiring piece, is to be extremely resourceful with the people that you know, and reaching out to them for like an opportunity to come work with you.
Mhm.
One of the first employees I had was somebody I hired in banking. I co-hired in banking, and I brought her over to start with me. She was only with me for 1 or 2 years, but I mean that's invaluable to get somebody making $22 an hour to to jump. At the time I had an 18, when I started it was an 18 base salary, 18K base salary, up to 15% commissions, and you need somebody that knows and trusts you and can
You
take
need some
that leap.
anchors.
Yeah.
Absolutely. You have to have at least one or two solid anchors, especially when you're smaller. That one, they just care about the business. They care not as much as you because you're not going to find that, but they care about you and they care about the business and they're
Mhm.
not just showing up for the paycheck.
Yeah.
And even if they're a service person, because those people for me are service people, I do have a couple sales too. It's just important to have somebody that's going to care about the business, that's not going to call in sick all the time and really just help you through those smaller, once your book is a little smaller.
Yeah. That's kind of the advice for new agents is it's get access to capital. You're going to need it, and you got to pay to play. I think for me a big game changer was just seeking advice from people out kind of just outside of my state. This is before I knew you, and knew you had a wealth of knowledge, but I was just getting involved in masterminds and
Absolutely.
things like that just to like meet people. I actually developed a friendship with you because of CWC, because I saw you at one of the events, and um
Yeah. I mean, I think that was a huge burden for most agents, almost like market meetings, right? Because you're only surrounding yourself with other agents in your market. And if you didn't have any other big players in your market or you're the largest one, you think you're at max potential or you're
mhm,
doing extremely well or there's no need to go try to double production. And then you branch out, you go to some of these events. I'm at event here. I did 90% networking with agents, 10% event. And the reason I do that is because I want to talk to the agents that are doing better than me, right?
mhm,
What are you doing? How are your processes different? How do I 2x my production? How do I double my production? And it's possible. Like there's agents doing it. I write 600-700 items a month. There's agents writing 2,100 items a month. That is insane,
yeah,
but that means it's possible. I'm picking their brain and trying to figure out how they're doing it. How can I either change my model or enhance my model to try to get to that level.
right.
And there's always going to be that person that you can seek out. So yeah, branch out, don't stick local typically, and find those that you want to, match performance to.
And when you go to these events, always you're looking for the one or two, like you're not no, somebody on stage isn't going to give you the earth-shattering piece of knowledge usually that's going to change your business. It's like that side conversation at the bar, at the
Mhm.
happy hour, or at dinner, that somebody gives you that one key and you're just like, that's what I came here
Absolutely.
for. It's usually not
That's my
not going to be
strategy too.
presented to you. You know what I'm saying?
Yeah, I mean, you'll pick up. It's such the presentations are such high level. So if you're trying to learn, like when I come here, I want one thing. I want one thing that I can take back and try, and it may be something that I'm against, but I'm going to try it. I'm going to give it a really good shot, a really good run to see if it works for me. But I have a well established model. If you don't even know where to start and you just need to absorb as much information as possible, the presentations aren't bad, right? Because they
Yeah,
they
of
they
course.
have some good stuff. They're just not going to be specific. It's a macro level. It's not a micro level.
Yeah.
So I'm looking for micro. There's some people looking for macro, and I just want one thing I can take back and try and really try, not just three internet
Yeah.
lids. Try, right? Throw a good amount of money at it. And these are things that are coming from those big agents that are working
Yeah.
for them.
I got a good question for you. So you just spent some time here in Vegas, and you told me you were hanging around somebody writing over 2,000 items a month. What was your takeaway from how to get there from where you're at right now?
So I always consider a couple different pieces, but I don't want to be a blocker for myself. So they have better close ratios.
Okay.
Their market has better close ratios.
Well, you're a numbers guy. You're a data scientist.
Yeah,
So
I know. It's
so
like,
that's the
okay.
first thing you're looking at.
But you can plug in the numbers, right? With their close ratio, I can plug in the same numbers and say, oh, well, we should still be performing at this level.
Yeah.
But yeah, I got a lot of good nuggets from that person, and I'm kind of scratching my head because something that I thought I had figured out really well, you start to question a little bit, and I'm willing to give that strategy a shot. It's a very similar strategy to what I'm currently doing, but there are little tweaks. So we're going to pivot just a little bit, see if it works for our market, because market conditions do play a role in it, but you got to give it a try.
Yeah. Just little slight adjustments. Lastly, before I get into one of my last questions is, I know you're naturally pretty good at this. It's something that I've had to meet people that are good at numbers just to like figure it out, versus, working harder, not smarter. But for somebody that, is maybe they're a few years into their business, they haven't dialed into their numbers quite like they need to. I was that person. I didn't know any of these numbers until like 5 years in. I had a pulse, like a just like a, like a way with, just, all right, that's good enough, But I didn't actually go granular with it until I met people like you and Ryan Chao and Filar. And so what would you say to those people? What's a takeaway or some piece of advice that you can help with those agents?
So we do a lot of comparative analysis, right? And this typically starts organically with salespeople. If you have one salesperson and they're writing 30 items a month, is it good or is it bad? Well, you might think it's good, but what if you hire a second salesperson, same lead, same process, and they're doing 60 items a month? Well, now person A doesn't seem to be doing as well as you may have thought, right? So that's comparative analysis. So when you have 5 or 6 salespeople, that 30 item a month person may not be doing great if everybody else is averaging 50 or 60, right? And I do the same thing for vendors, right? It's comparative analysis. I have multiple vendors because if this vendor's contact rate is X and this other vendor, his contact rate is 3 points higher, now I can compare the two, and it gives me leverage to go back to that first vendor and say, hey, I either have to shift all my marketing dollars to that other vendor, or we got to figure something out. Can we improve the lead quality, which they always can, regardless of what they tell you.
You think they pull levers to make it less quality?
No, there's just a mix of where they're getting the data. There's a lot of ways for them to get data, and most vendors can say, okay, this data is performing better for you, so I'm going to push more of that data towards you instead of this data over here. So they can optimize, but you have to work with them, right? And they're willing to do that. But if you only have one vendor, you have nothing to compare it to, right? So you don't know if they're doing.
How many vendors are you splitting your marketing budget for?
We work with lots of vendors. It fluctuates. Right now, we're probably 10 to 15 vendors.
10 to 15.
And part of it's a volume play, need more volume, but you also get more duplicates. So the more vendors you work with, the more duplicates you're gonna get. But we optimize every single vendor. We go in and we not only look at contact ratios, we also look at quote ratios and bind ratios too.
Got it. Okay. That's some good stuff. And then you use that example of your LSPs. What is the average of your LSPs item production on a monthly basis?
Yeah, it's average because I have some really high performing producers.
You got some anchors.
And then I have some new people. So I have some people bringing the average way up, some bringing the average way down.
What's like your second to sixth? What's that median average?
All right. Probably about, they're doing the average probably about 30 grand in premium. I think we're at 700 an item right now. So was that 40 items 40, average? Yeah. And again,
that's
6% close ratios, right? So that we're right
in line with our office, and so it's just you see these other agencies putting up, Century Club and 100 items, and sometimes it's like, why aren't we doing that? Especially when we got in these different states, I'm like, we should be doing that now. What's going on?
Well, and I do have a unicorn, right? Because he writes over 100 items a month consistently, regardless of close ratio. He just knows how to get it done, but he's doing more quotes, right? So that is a piece. When you're talking to other agents, you have to understand.
How many hours does he work a week?
40.
40.
Yeah, he might do 40. He'll jump on a Saturday. Okay. But when he's working, it's 100%
dialed in.
He'll do 20 households a day. He'll quote 20 households a day.
Wow.
Absolutely. And you need to write that production. You have to, because our close rates are so bad, right? So the LSPs know when we're in a tough environment, the amount of quotes they do per day have to go up. So The expectation right now is 10 to 12 households quoted per day to get to that level, that mediocre level of production, right? That's last year when things were a little different. We were writing. I mean, we had a month where we wrote 1,100 items.
Yeah.
So it was hard going from 1,100 down to 700 just based on all state changes.
Yeah.
We had to buy more leads, quote more to sell less.
I heard from leadership recently that, and I didn't like this answer. It's basically it was a suggestion to, for lowering loss ratio, and we've adopted the whole lead with liability, right? Like we try to get somebody twice the coverage, triple the coverage, the umbrella of course, right now we can't do umbrellas in Nevada. So that's affected our sales process a bit. They were hard to sell anyways, but, but I was told that, unless they own assets or real estate, then basically just it's okay to sell the minimum. And I struggled with that because we've spent the last several years, that's our sales process. Like we're going to give you more coverage. We're going to give you reasons to be more expensive. I don't even want to tell my team it's okay to, oh, well, if they don't have assets, just give them the state minimums. Because it's kind of like that same concept of if I tell them 3 hours talk time is the goal, then they're going to do 2.5, 2 hours and 15 minutes. So it's like you tell them 4 hours is the goal. So that way they get 3.5, a little over 3 hours a day. I don't even want to tell them it's okay to write state minimums because of,
the loss ratio pressures.
They'll abuse that. I guess what I'm, when our close ratio sucks so bad, I'm not sure where my question is. Maybe I'm just venting.
Well, I think you bring up a good point, and it's been a hot topic. It's usually more based on loss ratio conversation, right? Do you sell lower limits to reduce your loss ratio or your exposure to loss ratio even? And that's been floating around. I think that this is the message I've received from leadership is don't oversell a policy if they don't need it, but don't undersell a policy if they need it.
Right.
Now, do I agree with that? Yeah. I mean, to an extent, we like to sell to the need, right? Mm-hmm. So if you are a college student, you have state minimums with your current carrier, can we bump up your liability coverage, bump up property damage, put you in a better place for a reasonable price? That's what we're going to do. Yeah. We're never going to adjust coverage based on any other factor than need.
I heard the story from one of my mentors, which was, you got a guy that's a dentist, and you got a lady that's a mother of three. She works at, she cleans houses for a living. So they both cause a bad accident. Oh, who needs the umbrella more? The guy that could just stroke a check because he's a dentist, or the mother of
yeah, and that's one way to spin it, but there's another way too.
However, sometimes I wonder if maybe the lawyers in Vegas, I think they're too lazy to even go garnish wages or if there's no high limits, I think these lawyers just drop it because there's a juicier case right there that this Geico policy has $250K, $500. I'm going to spend my time where there's a higher, easier
there's
ROI,
a better return.
You know what I mean?
And it's not them being lazy. It's just a business decision, right? They're going to say, hey, yes, we can garnish wages for the next 30 years. They're getting, what are the lawyers taking home 30%? So what's 30% of garnished wages over the next 30 years versus an umbrella with the doctor? That's a much easier case to go after. The likelihood of being sued, your exposure for a lawsuit is much higher with higher limits than with lower limits. That doesn't mean you sell the policy differently, sell to the need of who you're working with. But yeah, I think from an attorney's perspective, they're going after the insurance limits, not the garnished wages,
not the assets, and then also Nevada's a homestead state, so so there's that
some protection there.
Well, yeah. Let's wrap this up. I got just one last question for you. It's the name of my podcast, the A1 Experience, and the definition of A1 is of the highest standards, of the highest quality. And I like to ask every guest, what are 3 standards that you live your life by?
Oh, okay. Let's see. Integrity, definitely one. Family and growth.
Okay. I like it. Integrity, family, and growth. There you have it. Those are the 3. So, yeah, I love that, man. I think that's the recipe for a good life. You got to put family right there at the top of the list as well. So
Even more for you here shortly, right?
yeah, yeah, absolutely. I'm excited for that part of the journey. Well, Ty, I just want to acknowledge you, man. You've been it's been a pleasure getting to know you over the last couple years. From not knowing you at all, just seeing your name. I used to see Big, and I was like, "Who's this guy?" You know what I mean? I didn't even know who this guy was, the rapper. And it's been a pleasure getting to know you, but also you setting that standard. You know what I mean? So it's like I don't get comfortable knowing that somebody in my own backyard, literally, like Reno's like almost behind Las Vegas.
Yeah.
You're in my backyard and you're showing what's possible and getting it done. And so for somebody to have that in their own state, I think it's a blessing, and you've done it the right way. You've done it slowly and progressively over the years. You know what I mean? Like you've done it in this incremental way that I respect. So just want to commend you for that
Appreciate it.
and acknowledge you. So how can people find you if you wanted them to?
Facebook's easy. Message me on Facebook. Email me. I'm on my email every single day. Tye Bearden at allstate.com is another good way. Always willing to talk to people. Like talking to other agents. Like hearing their success stories or however I can help.
Cool. Awesome. Well, Ty, thank you for being with
All
us.
right, man. Appreciate it.